Hi Team Value, JJ here, welcome back. Well, there aren't many single investing books that I could say have significantly affected my investing style, my investing approach, but Chris Mayer's 100 Baggers book is definitely one of those books. Today we're going to have a look at Chris Mayer's portfolio. I've made videos about 100 Baggers before and I'll link to those, but today we're going to have a look at specific stocks and what he said about specific stocks and of course investing in general. Now getting straight into it, I do believe that this is Chris Mayer's current portfolio of possible 100 baggers or maybe 10 baggers at least, and he thinks this. He said this in various videos. I've watched a lot of video interviews by him. He is out there, he says quite a lot, and so he has talked about a number of these stocks, a number of these companies before. Now if you have read 100 Baggers, and I do really recommend reading it, I'm going to link to that in the description. It's a really good book. In that book he talks about owning small caps because they have a longer runway for growth, a better possibility of getting to 100 baggers, which is really tough. Average 100 baggers, as he said before, take about 20 to 25 years, but he has some large caps in here and some mid caps in here, so he definitely changed his mind on that, and he has talked about that in interviews since he wrote the book. And if he did write the book again, he has said that he would change that, not necessarily looking for small caps, but as a general rule I do stick to that. I'm looking for smaller caps these days with good management teams, a long runway for growth, and of course good fundamentals, and that's what he looks for. And we'll have a look at some of those stocks today. What we can see here on screen is we think it's his portfolio. Most of it, he has said he has 11 stocks. The market caps have changed since this was taken. I did get this from Twitter, somebody who did a table of his portfolio. So these are the companies: Brown & Brown, Constellation Software, Copart, Dino Polska, Evolution, Heiko, Lifco, Lumine Group is the newest one, Old Dominion, Freightline, Technion, and Topicus. Now we're going to have a quick look at what Chris Mayer's said about a few companies in his portfolio. This is from My Wall Street about 6 months ago, but he doesn't have much movement in his portfolio. As you'll understand if you've read the book, he's going to hold these for the very long terms unless one's been a mistake. So 6 months ago doesn't really mean much. He'll still like the companies, still be in his portfolio. Let's see what he's got to say.
Can you name two businesses that you believe have the attributes you look for in multifold growth, that you own and that you think will be multi-baggers and hopefully someday 100 baggers?
Yeah, man. My holdings are fairly public on Twitter. I think everyone's always figured out my portfolio, and I write about things on blog and whatnot. So, I wouldn't put the 100 bagger expectation on anybody. So certainly these are not. It's not saying these will be 100 baggers, but I think, again, based on what we talked about, the underlying compounding, high rates of compounding, and the ability to do it for a long time, there's a couple that I like.
Now we'll look at some of these stocks. We'll just look at some of the compounding that's been happening over time with the companies that he mentions.
A lot of turnover in my portfolio. So the most recent one was Lumine Group, which was a spinoff from Constellation Software this year. That's the latest addition to my portfolio. And
we'll look at that.
I don't know if you're familiar with Constellation. I know you are, Emmett, but maybe our listeners aren't necessarily. But Constellation Software has been a long-term big winner in the stock market. It's what's called vertical market software, so software that's focused on some industry niche. So as opposed to horizontal market. So horizontal market software, you could think of, say, like, I don't know, say like Excel spreadsheet. It can be used, but anybody can use it in any different industry. It's not particularly tailored for a specific task. But if you were running, say, a golf course or an auto dealership, there would be a specific software solution you would use for that business, and that's vertical market software. And so that's what Lumine, and that's what Constellation does. And Lumine was spun out of Constellation, and what Lumine focuses on is a particular industry vertical, which is anything to do with media and communication.
So as he said, this is a recent spin-off, so there's not much of a history to go on, but this is Constellation Software and the spin-offs. The other one is Topicus, which he mentions as well.
So they've got some interesting businesses underneath that are real, they provide software to TV, radio stations, and all kinds of other things. And they're basically following that Constellation playbook. So there'll be acquisitions, high returns, software business, high returns, a lot of reinvestment. So I'm excited about that one. It seems like it has a very, very, very long runway and a good team.
Does the ROE concern you, or do you believe they're going to right that ship as the business gets more efficient?
Yeah, I mean, it's part of this, the way they do the spinoff. There's some complicated preferreds that are involved, and then they convert at the end of the year. So it's kind of the same thing as if you look at Topicus, which is a Constellation spinoff before this. They have the same effect. So the first year is a mess as the accounting treatment of those of convertibles, but next year, or at least the year after that, the financials will start to be cleaner, and then people will be able to see it. So right now, it takes a little work, but the underlying free cash flow is good, and I think the return on capital there, yeah, it's going to be something in the neighborhood of 25%.
That's what he's looking for.
Insider ownership is a little bit on the low side, I noticed. So are the managers and the owners, were they formerly in Constellation Software?
Yeah,
and
and Constellation Software, the mothership is going to owns a lot. And when the convertible is preferred, you're going to have that insider ownership. And also Constellation Software has the best, I think, compensation program I've seen. It's focused on ROIC and growth, and that's the way Lumine Group will also be compensated. And the executives at Lumine Group, when they get their bonus portion of it, they use to purchase stock in the open market, the same as Constellation. So you have really good alignment that way. Your management team is going to be buying shares in the open market with their bonuses and invested right alongside with you. There's no gifts.
So effectively, it's a Topicus kind of twin.
Yeah, Topicus is different because Topicus is a European constellation. It's focused, it can go anywhere, any industry. And so there's a lot of different businesses there. That's really like the Constellation, kind of a mini Constellation in Europe. And Lumine is different because it's confined to one vertical.
So we'll look at Topicus as well. Lumine and Topicus, Constellation Software. He owns all those. He's mentioned all those. He mentioned some of the metrics there, some of the fundamentals of each company that he looks for in terms of high return on capital. He also looks for high sales or revenue growth in there, good management, all of the good things that I do look for in a company, in a stock. And as I said, this book, 100 Baggers, has affected my investing from that point of view in terms of what I think is most important to look for. All right, let's have a quick look at the companies, the stocks in Chris Mayer's portfolio as we know it. Okay, if you're getting value out of this Chris Mayer 100 Baggers episode so far, I'd really appreciate it if you remember to smash that like button to help the algorithm to spread it to more people. It really does help. And if you're new here, if you're not subscribed yet, do consider doing that as well for more of this kind of content. He could have changed, of course, there's no guarantees that he still owns them, but it's highly likely that he does. And this one's Constellation Software. I'm going to start with the biggest cap, and Constellation Software is a $58 billion market cap at this time. So there's been a lot of talk about, can they continue compounding at the rate they have for a very long time? And as we can see here, that rate is 32.4% CAGR for that whole time, way back. We're going way back to 2006. So there's, the question about, can Mark Leonard, the head, keep compounding? And they've had these spin-offs, which we'll see there, smaller caps of say 20 to 25. This one's achieved over 30. So it's an incredible rate. So in terms of getting 100 bagger, they have to be sustained over the long period. So there's very, very few companies that have done that. I've talked about this to my Patreon members about finding companies that can do this, that can be sustained. And there's very few in the world that have been managed to do that. Berkshire Hathaway is definitely one, Constellation Software. So what are the small caps that can do that? That's the question. And can they do what Constellation Software has done over this long period of time? Next in this portfolio is Old Dominion Freight Line, which is at this point $37 billion company. And it's not one that many people would expect to have a compounding rate of 25% CAGR over this long of a time since 2006. This goes back to, again, so over that longer time, 25% CAGR, and this is what he looks for. You'll see a theme here that all of these companies have had an incredible compounding rate, except for the ones that are recent IPOs or younger companies. They haven't had a chance, but he is betting that that's what they'll do. One of the lessons with high compounding companies and 100 baggers in the book, if you read 100 baggers book, There are some that you wouldn't expect, some industries. It's not just tech, which a lot of people think. Some of these are tech, but it's not only tech that reach 100 bagger over time. Monster Beverage is one of the examples in the book that it's been 100 baggers. There are a variety of industries where this has happened. Next is Copart, which is currently a $50 billion market cap, and we can see the compounding there is nearly 21%, which is still high. Chris looks for companies that can compound at 20 to 25%, which is an incredible rate. If you look at companies that can sustain that over the long term that have, it's very few. But Copart's been one of them. And what does it do? You might be surprised if you don't know. The company's services include online seller access, salvage estimation, estimating, end-of-life vehicle processing. So we're talking about junkyard kind of activities here. So this is one company that you wouldn't think could be a 100 bagger or at least compound at this kind of rate over the long term, more than 20%. So it's worth looking wider. And also for diversity, you'll notice that Chris only has 11 stocks there, but they are diversified across industries, across sectors. As we saw in one of my recent videos with Bill Ackman, he says that 12 stocks is kind of a good number. A dozen stocks, any more than that, it doesn't really increase diversity that much, and you can get quite a lot of diversity from about a dozen stocks, and that's what we see here in Chris's portfolio as well. Now this is Heiko with a market cap of 26 billion at this point, and a common theme here, you'll see the CAGR is 22.5, over 20% again. It's a pretty diversified company in itself, and it's another one of those serial acquirer companies that he's pretty fond of. He does talk about serial acquirers. He owns a few of them. His Constellation Software is a classic serial acquirer in that specific area of vertical market software. Now moving down in market cap again, we've got Brown & Brown, which is a $24.5 billion company at this point, and this has been compounding at 11.3% CAGR. If we look at over 10 years, it's closer to 20, and over 5 years, it's over 20. I haven't looked closely at the company. Obviously, Chris thinks that it can keep compounding at those nearer term levels over the long term. He's looking for over 20%. Now, if you don't know, Brown & Brown markets and sells insurance products, so more diversity again across companies. Now this one's Evolution Gaming, which is a Swedish company. That's the Swedish currency. I'll change to US dollars there. It's $22 billion company, so it's a pretty big company, and overall it's had a 52.3% CAGR over 9 years, so a younger company, a smaller company with a high compounding rate. It's been through its ups and downs, which he does talk about in the book. You've got to withstand some big down periods in these stocks. He looked at Monster Beverage and Amazon. They've had some big drops in the history. So to own these companies with high compounding, sometimes they have big drops. And what is Evolution Gaming? It develops, produces, markets, and licenses live casino solutions to gaming operators primarily in Europe and United States. So you have to be okay with, casino type games to own this kind of company, but it definitely has been a high compounding company. Next one is Lifco, which is a Swedish company, and we can see that it's nearly a $12 billion company at this point. So more getting into more of the mid-cap range here. And this is compounded at a rate of over nearly 24% and nearly 10 years, 9.5 years. A younger company than some of those really big caps, but you'd expect that. And again, we can see that it went down since 2021. Quite a few companies did run up in that 2021, emerging companies or younger companies, especially involved in tech. But this one is a serial acquirer company, and a common theme, he's got a few serial acquirers, and this one's also in Sweden, a few Swedish companies. Sweden's becoming sort of known for serial acquirers for some reason. And next we get to Dino Polska, which is a Polish company, but in US dollars, it's nearly a $10 billion, so a mid-cap, and it is compounded at an incredible rate of nearly 40%, 38.3%. over 7 years, and it's a grocery chain, another one that you wouldn't think could compound at this rate. Small stores in Poland. And now we get to Lumine Group, which is actually a Canadian company, but if we switch it to US dollars, it's just over a $7 billion company, so fairly big for recently going public. This is one, as he said, of the Constellation Software spin-offs, And at this point, it's compounded at 120%, but it's only over just over 1 year. So recently IPO'd, recently public. It's going to be interesting to see how this goes. And if the market does go down, this might be interesting to see how much it goes down. It's not exactly cheap, and it's compounded straight out of the gate. There was a lot of attention on this one, just like Topicus, because Constellation Software is so well known and investors were pretty keen to get in on this. But it will be interesting to see if the market does crash at some point or go down significantly if this takes a dive at some point. It's such early days for this. This is another serial acquirer, this time in the media space. Now, if you're interested in finding more out about Lumine Group, which he talked about in that recent interview, he did point to this from his Twitter profile, X profile, which is a deep dive on Lumine. So it talks all about the company, the history, and how it relates to Constellation Software. So this was published not long ago, so it's pretty fresh. It includes a valuation or what they think, just their opinion on where it's placed today. And this one, Topicus, which is a Canadian company again, the Constellation Software spinoff in US dollars, it's nearly a $7 billion market cap. So a little bit smaller than Lumine Group, even though it IPO'd earlier. And we can see that it's compounded since IPO at 16.2%, so not above that 20% really yet, but it's still early days. It's only been 3.3 years, so we'll see how this goes over time. Now, this is basically the same business model as Constellation Software, but in Europe, which is a big market if you think of all the European countries. And the smallest cap in the portfolio is Technion out of Sweden. Again, a few Swedish companies here, which only has a market cap of 349 million US dollars, so way under $1 billion. I'm betting that he does still own this because he's recently went on the board of the company. He has talked in interviews about visiting the company. He's talked a lot about this. He thinks that this does have a long runway for growth, and as we can see, it's over the last 5 years, it's had a 38.6% compounding. This year, it's not so good. It's been down 12.9%, but if we stretch it out over the long term, and they have had some macro problems in Sweden, and that's affected some of the companies, I believe, in their portfolio. It is another serial acquirer, just a small one. It's not to do with tech. It's mostly industrial, or they're not against tech. But that's Technion, the smallest in his portfolio, and he's on the board of it. The management team does like to look at Berkshire Hathaway as a kind of model of how to operate. A lot of these serial acquirers do, because that's been a great serial acquirer, a 100-bagger over time, and so they want to replicate that success. This one happens to be in Sweden, but they can buy anywhere, of course. Now, as I said, 100-baggers books definitely affected my investing, and I do talk about that a lot on Patreon, especially small caps with a long runway for growth, good management, that's what I'm looking for, and high compounding over time. I'm definitely looking for those kind of companies, and they're very rare, but I do talk about that quite a lot on Patreon. If you're interested in that, I'll leave a link in the description and see you over there. Now, if you're watching this on YouTube, I'm going to put a previous episode here about Chris Mayer 100 Baggers. If you're interested in looking deeper, go and see that now if you want to. And I'll put some links in the description as well for those watching or listening elsewhere. And thanks to everybody for watching or listening, and I'll see you in the next one.